What's going on, YouTube? This is Dave's Daily Trades, where we bring you daily AMC technical analysis, price predictions, and of course the latest greatest news. Be sure to smash that like button and subscribe for more content. Anyways, guys, I do apologize for being away for the past couple of days. I did have a death in the family and really just had to be with the family, and of course I know you guys all understand. But regardless, guys, we are back and we are ready to jump into today's episode because there are some massive things going on in the overall market and of course with AMC. So in today's video, we're going to be going over some really interesting stuff about the overall market and the overall economy, of course about the potential shutdown that is on the very near-term horizon. We're going to be going over the global economy and what's going on over that. Of course, we're going to be taking a look at IV, which of course is showing some comfortability at the levels around $40. We're going to be taking a quick look at NSCC 2021-11 and what this means. And of course, going over a technical analysis for AMC because things are looking great, guys. But before we do, guys, be sure to hit that like button and subscribe for more content. All right, on to the AMC technical analysis. So, of course, nothing really too interesting for today. We did close at $39.98, only down 0.25% on the day, and in the grand scheme of things, a very simple, boring day for AMC, which is okay because we do need these days. Of course, after hours, we're slightly up. Right now, 0.80%, 0.75% as I say that, of course. Really has to mess with me on these videos. But anyways, it was a decent day for some consolidation. And what we're seeing is consolidation around this range of right around $40.45 all the way to $40.80. And this is something I like to see. And especially once we zoom out into the 1 hour, 1 day, we'll see that this consolidation is really needed. And of course, things are looking like they did towards the middle to end of May. And we're going to jump into why that matters and what we can expect to happen next. But of course, we did close very close to the lows of the days. Besides for this last green candle at the end of the day, we would have closed exactly at our lows. But we did have that gap up in the morning. We did have to come down and fill that gap. And I really like to see this consolidation right in between this gap fill. Of course, I would have liked to seen us close right around this consolidation area, but that's totally fine. And of course, really just setting us up for moves in the very near-term future. So we're going to jump over to the 1 hour chart. Of course, zooming out just helps a whole lot. I mean, the 1 minute chart is sometimes too much to look at, but of course, we do want to know what happens on the day. Anyways, guys, jumping right into the 1 hour chart here, we do have this support line drawn at $38.52. And this has really been our saving grace over here on 921 and 922 when we did bounce off of this and start to move a little higher. That's really what I like to see, especially as this was acting as a resistance line just about a month and a half ago-ish. So that's great. Love to see we're above and holding this area. And really that we have tested this now, I really believe we're going to start making moves to get back up into that $48 range. And of course, breaking past that $50 and coming back around $60. And of course, it's not going to happen overnight. This is going to take time to play out. But anyways, I do want to direct you over here to the area of 5/13, May 13th, and May 26th. Of course, this was right before our run-up. We're going to zoom in over here. So during this time frame, it looks just so similar to AMC at current date right now. And we really can't throw out that there are some algorithms playing in the background to manipulate this stock. And these algorithms are creating very noticeable patterns that are going to be playing out. Anyways, what I want to show you is we did have that move up to come up to the old resistance level of $14.58. Once we did get rejected from that, we traded right around that trend line, dropped down, and then consolidated for a little bit. This was over the course of just about 2 or 3 trading days. and then we start to slowly trend higher. And once we broke through that 28.73, it was literally off to the races to all-time highs at $72.62. Now, if we look over here, this is what I'm talking about right here. May 13th to the 26th. All right? So what happened? We come up to this resistance level at $48.02. Look what happens. We get rejected, we consolidate, we have a very slight breakthrough, but then come down and regain this support at $38. Now this looks so similar, where we come up, we get rejected several times, come back down to this channel and consolidate. And that level of consolidation over here was right around $12.18. That $12.18 is very equal to $38.54. We have this slight trend down, which is still very constant. Have that slight trend down, boom, and this is where we pick up. So I'm not saying that this is going to happen tomorrow. What I'm really hoping for is sometime middle of next week, we are going to start that trend up. The big thing is crossing that $48. Once we do cross that $48, close on the daily charts in this area right here, that's when we're going to start to see those 15, 20% plus days. Breaking 62, once we break 62, you guys know what's good. It's going to go freaking crazy. So that's where I'm at with AMC right now, and that's exactly what I'm watching for. Really, the biggest thing, first of all, is breaking that $48.15 level. My predictions for tomorrow, relatively flat. I really hope to see a 1 or 2% green day on Friday, which of course Fridays are typically slow trading days for AMC and the overall market. But of course, we'll wait to see what happens tomorrow. Anyways, we're going to jump into some really interesting thing that's going on in the economy. And first, shout out to Zion Lion coming over here and posting a great post about mega shorts, literally mega shorts. So I'm just going to go over this post real briefly and show you guys what's up with this. So all of the S&P 500 top company shares are sold short. And of course, except for Facebook for whatever reason. Less than 5% of shortable shares are available, that are available alone to short from the biggest companies. We're going to just open the screenshot right here. And this is, of course, the top holdings of the S&P 500. And look at the shortable shares here. And of course, for the outlier, you do have Facebook sitting at 28.33%, close enough to 30. But everything else, Apple would be the second highest at 6.61%. But everything else is well under 3 or 4%, which is just absolutely insane. So why is this happening? I'm personally thinking because of a couple reasons. So the biggest thing, of course, a lot of people are going to say Evergrande, which of course I think plays a little bit into the equation here, but we really haven't seen the effects of Evergrande come over into the United States yet. Of course, that is still a pending process with their loans that are out right now that they have to make payments on. But of course, they do have 30 days from today, actually, to make those payments. So that's going to take a little bit of time. But the biggest thing that I'm predicting that is causing all of these short positions on major companies is this right here. The White House is telling federal agencies to prepare for a shutdown. And why is this shutdown possibly going to happen? It's because Congress cannot agree on the budget, and Republicans don't want to raise the debt ceiling, but Democrats know that they have to raise that debt ceiling. So this is not something that is 100% certain. I mean, this right here, at least preparing for it, shows some conviction that this may happen in the very near term. And of course, they do currently have until September 30th, which is only 7 trading days away. So next Thursday, very big day to see if this gets passed. And if not, well, guess what? Congress and the overall government is going into shutdown, which is just going to be absolutely terrible. And of course, in regards to the overall economy, we have the Swiss National Bank, the president over here, saying policymakers are watching for possible fallout from China Evergrande Group, warning that such situations can sometimes escalate out of control. And just a little info down here, a little fun fact as we have it. Swiss Central Bank owns $162 billion of U.S. stocks. So why is that relevant? Well, of course, if we have a massive pullback over here in the Swiss National Bank, they gotta pull up some liquidity. They gotta freaking sell some stocks. Talking about a lot of money in the stocks from the Swiss National Bank. Sorry about that, guys. That could be dumped out. And of course, this is going to relate to the overall economy. We're talking the global economy. So, of course, you have Swiss, you have other countries pulling their money out of the market. It's a domino effect, and of course, it doesn't end it is going to end very badly. One really interesting tweet that I did have to share with you guys is the implied volatility. Sorry, can't talk today. Implied volatility. AMC now has the lowest implied volatility, or IV, that we've seen in the last 11 and a half months. And this dates back to 10/9/2020, before AMC even became as popular as it was. So that's something really interesting. And of course, if we're trading options, guys, one really important thing is to go into an option play with very low implied volatility. That makes it very cheap, which is, of course, very attractive. So the more people you see seeing this low IV, implied volatility, the more attraction it has and the more people you have taking these call options. And also, it really shows that AMC is very comfortable around this $40 range, which, of course, AMC, if we look back at historical dates, we're going to just jump into the weekly, AMC has historically never seen these levels. I mean, going back over here to 2015, AMC was at $34. That was pretty much the high. So sitting at $40 with the lowest IV that it's seen in quite some time, I'll take that any freaking day. All right, so some big news happening with the NSCC. And I'll just read this right here. This document is scheduled to be published in the Federal Register on 9/24/21, which of course is tomorrow, which is Friday. And of course, NSCC 2021, we're going to just dive right into this, see exactly what this is. So really on page 3, and I'll link this article in the description below if you guys want to take a read. I'm just going to be going over really the the biggest points right here. And as you can see, I have default right here found on my Chrome extension. Anyways, so the required fund deposit and risk management of ID net transactions. As part of its market risk management strategy, NSCC manages its credit exposure to members by determining the appropriate required fund deposits to the clearing fund and monitoring its sufficiency. The required fund deposit serves as each member's margin. Of course, we all know what margin accounts are, guys. The objective of a member's margin is to mitigate potential losses to the NSCC associated with liquidating a member's portfolio in the event NSCC ceases to act for that member. So, of course, you have very risky market makers, hedge funds, various other members out there. Of course, if they get too risky, guess what the NSCC is going to do? They are going to liquidate their entire positions. Why? Because if they don't, the NSCC is going to take a giant hit. So pretty much to sum this rule up in very quick terminology, the NSCC has the ability to just hop in, liquidate those members' positions if they become too risky. Anyways, the aggregate of all members' required fund deposit constitutes the clearing fund of NSCC. NSCC would access its clearing fund should a defaulting member show an own margin to be insufficient. You have an insufficient margin, guess what? NSC is coming after you saying absolutely not happening. This is not happening because they, the NSCC, are now taking on the risk of your risky position that you have. So, of course, this fund that they have is pretty much the backstop. They're going to dip into this just in case a member does have to get into that default, and that's essentially what this is happening. So, this is important? Yes, absolutely. And especially around the time where, White House is telling federal agencies to prepare for shutdown. You have all of these shorts on major companies. And, of course, global economic issues. So this is coming out at the right time. When can we see this come into effect? I believe, and correct me if I'm wrong, guys, but I believe this is anywhere from 30 days or 30 trading days. I can't remember off the top of my head, and I apologize for that. Anyways, what you guys think of my new Twitter thumbnail over here? our favorite hedge fund manager, and shorts must cover. And guess what? I am not going anywhere until these shorts cover. Highly suggest you do the same, but of course, I'm not a financial advisor, and this is not financial advice. Anyways, guys, hope you enjoyed today's video. If you did, be sure to hit that like button, subscribe for more content. Tune in for the next one. Peace.